Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is September 2nd, 2018 edition of Market Outlook. So hope everybody's having a good end of summer weekend. Let's drill in. I'm going to try to make this as brief as possible. So first thing is that we did hit new highs, certainly all-time highs in NASDQ and the S&P and IWM this week. So that is very, very overall positive action. Now, the one thing that is lagging and has not been able to take out its highs since the beginning of the year is the Dow. And that's sort of the weakest link at the moment. But one thing you can see, IWM, new highs on Friday. So that's new all-time highs. In terms of momentum, it's doing okay. It has not achieved the stronger momentum that was reached in June of this year. So as you can see, new highs in here, but yet not in momentum. So that is just something to note on the daily charts. Now, conversely, the S&P also made a new all-time high, but as you can see, we broke cleanly out of the 200-day of real motion, and momentum is definitely stronger in the S&P, even though you had sort of a bit of a changing of the guard there on IWM, making the all-time new highs on Friday and the outperformer, as you can see. Now, in terms of NASDQ, poised, right, since June, we have been making new highs here. However, momentum-wise, we're just sort of paused. So any further upside action would really break this out on the daily charts as well. So net-net, things are looking pretty much in gear. Now, in terms of momentum and price action, the longer-term trends are also firmly intact on the leading indices. So let's just take a look here. And one thing you can see is that the Qs, the NASDAQ on the weekly charts, which sort of overrule and supersede anything else, right? Weekly charts definitely look at the longer term trend. And so one of the things you can see, our 50-week of real motion, nicely over the 200. We've got some of the strongest momentum here on the NASDAQ index, the NASDAQ 100. Now, also to note, IWM on a weekly basis with Friday's closed, on a momentum basis, closed on all-time highs. Now, again, the laggard, and as you'll note, is still the Dow Industrials, the bigger cap stock. So even though it's in overall positive mode, the sort of longer term fly in the ointment here is that the momentum is still lagging. Since the reset in February and April of 2018, this is still the strongest momentum. So net overall, with the exception of the Dow, things look pretty much in gear, and although momentum is not running super strong or overbought. So in terms of key reference points, what I'd be looking at here as a potential failure or important support, and if we do break down, that would be a test, probably end up being a test of the 50-day moving average, which comes in on the NASDAQ at about 179. But the breakdown here on the 10-day moving average across the board is probably your first warning that you might be into a short-term sell-off, which would be consistent with the seasonals for September, which are generally pretty weak. So just keep on coming back to the website. Take a note if we do, in fact, start trading and closing under this 10-day moving average. It's the closest in the Dow. And in fact, the lows, 259 or so, coincide with the 10-day moving average. So I would be alert for that. That would be the first sign of weakness, but I would be really looking for at least two of these indices to take out the 10-day moving average. And of course, you can always come back and see where that's sitting here on a closing basis every day. Okay, one of the key charts I like to look at in terms of intermarket relationships, and this one is key. We like to look at the S&P versus utilities. We have a special indicator here, the ratio between the SPY and the XLU. We look at it both on about a 6-month and a monthly basis. This blue line here, that's a moving average, the longer term moving average of the ratio. You can see on a closing basis, we've closed well above the both short-term monthly, which is the black, and so we've been above that for a couple of weeks. We also just nicely improved above the 6-month, the longer-term one. So in terms of risk on, risk off, things are still in gear, showing risk on for U.S. equities. Now, the next chart we're going to go to is taking a look at volume analysis. And one thing you can see is that institutional volume definitely showing signs of strength overall. What's most interesting is that the S&P 500 picked up the most. It's got 4 accumulation days over the last 2 weeks versus 2 distribution. That's pretty good for a seasonal, which definitely has negative trends for August. We definitely bucked that. Okay, the next thing to move on to is just taking a look at overall performance here. One thing to note, you can see that for the week, each of the indices closed up decently, with the NASDQ 100 really on fire, up over 2%. So that's a real positive. And on a month to date, you can see all of the key indices were up over 2%, with the NASDAQ 100 on a price trend up over 3.65% for the month. Another really strong sign is the fact that sectors is definitely confirming the strong move up, because both the utilities, right, conservative play, risk-off type play, down 0.4% for the last week. Also not doing all that well in general. So there you have utilities under pressure, good sign for equities. The other thing to note, confirming this as well, consumer staples down 0.5% for the last 5 days as well. And you can see consumer staples is actually one of the leading sectors under pressure. Year to date, it's down over 5%. So with that, you can see definite divergence between the two clear conservative plays, utilities, consumer staples, both badly lagging year-to-date performance relative to the S&P. The other good sign, of course, is that technology, consumer discretionary spending, those sectors, as well as semis, up very, very strong. The other thing that's not here, but sort of a subsector of the healthcare sector, IBB, which is biotech, also extremely strong over this week and over the past several weeks. All right, so that sort of wraps up where we are. U.S. equities still on fire, well outperforming the rest of the world, with one exception, which is Israel. And if you're a member of the premium service, we're going to get into that chart in detail in a moment. At any rate, have a great rest of the weekend. Look forward to seeing you next week, and bye for now.